Hello friends, in the series on income tax cases, today we will discuss a case in which there was an issue before Chandigarh ITAT that if during the survey of an assessee, some defaults are found relating to a particular period, so whether in that case only on the basis of default for a particular period, the revenue can do extrapolation for the whole year of the figures of the sales. And the second issue was that if some statement is recorded during the survey proceedings and other than that survey, if there is no incriminating material, so whether in that case the addition can be done just on the basis of the statement of an employee who is not cross-examined by the assessee during the assessment proceedings. These issues have been taken up by the tribunal in the case of Shrimati Saroj Gupta versus Assistant Commissioner of Income Tax, and this case is reported in 134 ITR Tribunal at page number 644, and the date of the judgment is 7th October 2025. The present case relates to the assessment year 1920. In the present case, the assessee is a medical diagnostics center, and there was a survey on the assessee in which the survey team found that there were patient registers and bill books. These patient register and bill books were found for a period of 28th April 2018, and some registers were also found for the period from September to December. The survey team found that there were some entries in the patient register for which there were not issued the bills, and the statement of the employee of the assessee was taken, and the employee admitted that only 10 to 15% of the patients' receipts have been accounted for in the bill book, and he also further admitted in his statement that bills to only those patients are issued who specifically asked for the bill. The employee also admitted that a referral fees is being paid to the doctors who recommend our diagnostic center for doing the test in our lab, and the referral fees is being paid to them. So the assessing officer, on the basis of some incriminating material found for the period of the month of April and for the month of September to December, extrapolated the figures and calculated a figure of rupees 1.77 crore of sales. That this is the sale which has not been shown by the assessee, and accordingly made an addition of 41.94 lakh corresponding to that sale, meaning thereby that the assessing officer extrapolated the figure for the full year on the basis of the survey period. Secondly, the assessing officer also made an addition of the referral fees by taking the referral fees of 25% of the total fees by disallowing under section 37 by saying that referral fees is disallowed under section 37. When the matter was before the CIT appeal also upheld the order of the assessing officer. So when the matter was before the tribunal first of all said that the assessing officer do not have the power to extrapolate the figures of a particular period and applying that figure for the whole year. Extrapolation is not allowed in the assessment proceedings. Only the addition can be done on the basis of the incriminating material which is found, since in the present case the incriminating material has been found only for the period of month April and for the month of September to December. So for that the tribunal pegged the figure of addition to an extent of rupees 5 lakh. The tribunal also said that in the present case the case is to be seen like this, that if the statement is not there, so other than statement, what is the evidence which is available with the department? Since in the present case no evidence is with the department, so no further addition is justified for the unaccounted sales for the rest of the period, and since there is no evidence found or no incriminating material found regarding the referral fees paid to the doctor, so addition for that is also not justified. The tribunal said that it is a settled law that the statements recorded during the survey proceedings do not have much evidentiary value in the absence of incriminating material. The tribunal also said that since the assessee was not given the opportunity to cross-examine the employee of the assessee, to cross-examine that to whom the referral fees have been paid. So in the absence of cross-examination also, the additions are not justified. At the end of this video, once again I am repeating the name of the case. The name of the case is Shrimati Saroj Gupta versus Assistant Commissioner of Income Tax, and this case is reported in 134 ITR Tribunal at page number 644, and the date of the judgment is 7th October 2025. Thank you, friends.